weekend all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up for Friday, September 10th, 2021. What an ugly week. I think the S&P was down every day this week. Got beaten up very hard. You know, they say September can be the rough month. I didn't expect it to be this rough to start. I wanted to put my head in the ground. It was just a beaten up one. Gold didn't do very well. Energies did well. You came out today with the USDA WASDE report, and I wrote in the morning report, and I did the numbers, put it in the report, and I said, wouldn't surprise me if we end up higher in the markets that got beaten up, which were the corn and the beans, and that's exactly what you did, because the market had already built in quite a bit of bearishness, and maybe that was the culmination of it. Dollar up, most currencies getting beaten up by that strengthened the dollar. So when we take a look at the S&P, you were down 1.38% this week. Last week, you were up 2.9%. So this is the first week of a correction. And I think it's very difficult to say on a weekly basis that you're down 1.38%, that you've turned the corner to the downside. So a correction, yeah. How long it'll go? Well, the market will tell us. And by the way, that is for the month. Now we go to the weekly charts. And as you can see on a weekly basis here, you were down 1.68% this week. Last week you were up. So this is the first break from there. And on this contract, you're down just shy of, 1.75%. When you take a look at the chart action, and this is all off the weekly charts, you can see how the market kept making higher highs, and you're finally correcting. You've done this several times. But each time that you've done it, the market has managed to come racing right back. The pattern of the chart is still one of higher lows and higher highs. So where might the support of the market come in? Well, the 18-week moving average of closes is what this market seems to like to make runs to when it goes into a corrective mode. Does it have to go there? No. But 43.3875 seems to be a target number that I have in mind. When I look at the Bollinger Bands, you've stepped away from them. So I view the market as having hit the upper targets, pulling back, and that might be the phase we're in. I think we have triple witching coming up, too. Remember that. It's where the futures expire, the options expire, and all. Wouldn't be a surprise to me that the market's weak in front of that, and then all of a sudden the market finds its legs. Those things do happen. In terms of momentum, excuse me there, you still are embedded. Now, embedded means on a longer-term chart, when it converts itself from being overbought and both the red and the blue line, they're called a K and a D line, go sideways on the weekly charts and stay over 80. If they get under the 80 level, it's a sign the market wants to correct further, especially if they close over a 79 reading, and that often leads to a run at that close 18-week moving average of closes. The Nasdaq is a similar pattern. Higher lows, higher highs. For the week, you're down 1.34%. That's off an all-time high. So these markets correcting, I don't think anybody's prepared, if you're a weekly chart, of saying, well, that market looks bearish. I'm not seeing that. Again, the momentum is still locked in. You'd have to close that red line under 79 to tell me that the market has lost its upside momentum. The Dow did lose its upside momentum. Notice how the market's got a finish here of 78.24. When that happens, you often go to the 18-week moving average. Look what it did this week. I didn't expect it all at one time, but it went right there. And now the market's very much caught in what? A bit of bearishness. Whoa, why is this one bearish? Lower highs, lower lows. The settlement at 34,607 is under the 18-week average. So until the market goes back through these highs, the potential lies in the market to get down to the lower Bollinger Band of 33,745. This is not in a bull state. That's in a bearish state. What about the Russell? The Russell is still a pattern of higher lows, higher highs. Now, the bias turned down this week. Notice how it closed underneath the 18-week average. You were down 2.75% for the week. You could be headed back here. But until you get under 2108.70, you're not telling me that you've done anything except a market that is caught sideways. That's what I think we've got. I think the Russell has left its bearish phase, but I don't think it's entered a full-blown bull phase on the weekly chart. The 30-year bond is looking heavy. You've got a pattern of lower highs, lower lows. Momentum had been overbought. It's turning down. So why am I not saying it's bearish? Heavy's different. And that's because prices are over the 18-week average, which means the bias is up. Where the market settles or trades in relation to an 18-week, an 18-day average tells you if the bias is up or down. If prices are over that, you have upside bias. Under it, bearish. So when you have a trend down but the bias is up, the two negate each other and you've got nothing other than a correction in a market that still has bullish bias. Same thing has to be said of the 10-year notes. And I know so many people saying interest rates have to go higher, blah, blah, blah. Well, they haven't. What can I say? They bottomed out in the 112 area. They peaked out at the 1.75 in the 10-year note, and they're around 132, trading back and forth in that range. In the dollar index, you have an overbought market in an uptrend. A couple of weeks back, right here, you made your run at the upper Bollinger Band. The odds of staying above or below, like here's below a Bollinger Band and staying under it, but staying under it's only 5% of the time. And if you count, it's rare that you'll get 5 weeks in a row under that or 5 week above it. Daily charts are a better way to play that, but you see it happening all the time. In the eurocurrency, it's a market that had been bearish and it lost that bearishness. Now, this is called embedded. And when you lose that, like you did here, if you don't get it back the next week, which you did not do, prices often say, at least I interpret that to mean you're going to make a run at the 18-week average before you take out the most recent low in the chart. So while the trend is down, the bias is down, you're very oversold, and I do have that indicator at work. In the Canadian dollar, well, we're going to find out this, September 20th, I think, is the election in Canada. So is Mr. Trudeau going to be able to pull one off or not? That's going to be the rough thing. And the polls are very tight. I don't think he counted on this being that tight. I think it's the Tories that are giving him the hard time. Lower high, lower low, trend down. You're not pointing up here in the momentum and the bias down. You're still bearish until the market gets back over this last high right here of 80.03.5. So I'm still watching that market. Target could be right here, 77.65. Do you really want to play the election? That's what you got to figure out. The Japanese yen had upside momentum that has flattened out. You see how the market was climbing with that, and suddenly the market is now running downward. It closed this week at 90.98.5, which is just over the 18-week average. So the bias is up. The trend is down. I think you're just stuck on that 18-week average as this market's trying to figure out what to do next. In the meantime, the daily charts are all over the board. In Bitcoin, the first time you get up to an upper Bollinger Band is where I teach the pros come out of the market. You were overbought, you got there, boom, away you go. Now, that doesn't mean I'm bearish. That's not what I'm saying. I think that the market now has to prove itself at the 18-week average, and it's very overbought. I don't think you're attracting new money here. In the differential between Brent and WTI crude, you see that you peaked out here towards the $4 level. You've been falling back a bit. When you look at Brent right here, you've got on the weekly chart, which is totally different looking than the daily. You've got a market with lower highs, lower lows that is staying over the 18-week average. So it's keeping the bias to the upside. In that process, you were able to get away from an oversold condition. So now the question is, does it start down again? We're supposed to, or probably going to hear, according to Reuters, a new revision from OPEC Plus on what they think now the demand is going to look like going forward. So that should be interesting. The last time we looked, it was, 4.5 million barrel a day increase is what they thought we were going to get. Now let's see what they're talking. WTI crude, major battle right here. The pros, I think, are selling that market short. Where would they be wrong? I think over 70, 61. You'd have to throw in the towel, the way I would teach charting for that. Rebob gasoline looks to me like it made a summer peak. The market's got lower highs, lower lows. It hasn't entered a full bearish zone, or has it? Yeah, it has. Lower highs, lower lows, under the 18-week average, and momentum pointing down. Still very much in the bear camp. So you put that all together and you try to learn from all this. And that's what we do with what we offer you a free trial to. You might want to take a look at my full research package. What you get are twice daily written updates, minimum Monday through Friday, barring holidays. Special updates when I think the need to send them out, and I probably should have sent one out today when the stock markets were coming apart. The updates will give you entry points, exit points, stops, my recommendations. I'll live and die by them, as you can imagine. And then in the morning, I give you a morning subscriber video. Now, in that video, I review all these for you. What do I mean by that? I'm going to take the chart and show you where I got the recommendation from, why, how it came together, and you decide, does that fit something you might want to do? In other words, you might want to bounce this against your own ideas. Our software, everything works on your phones, smartphones will work no problem, tablets, computers, everything there. And it's free. So let us give you a couple-week free trial to this. Just go to our website. Under free offers, it's right there. Click on it, take any other offers you want, and we'll get it to your hands this coming week. Have a great weekend. I'll see you all come Monday.